Hey everyone, we got some big news for Intel stock investors. The company is making excellent progress on its promises to investors, including a several billion-dollar cost-cutting initiative. So let's take a closer look at the inside of Intel and let's look at how these latest developments will impact shareholders going forward.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Intel CFO David Zinsner gave us some big news updates within the company, highlighting that they exited 2023 a healthier and leaner company, but there's much more work to do in 2024 and beyond to deliver on our long-term financial objectives. Now, in the fourth quarter specifically, revenue was up by 10% to $15.4 billion, and that was $300 million better than the midpoint of what management had expected. That led to gross profit margin rising to 48.8%, which was 230 basis points better than their guidance. So a beat on the top and gross profit margin, and the bottom line here, earnings per share for the quarter were 54 cents, beating guidance by 10 cents. So across the board, better than expected results from Intel in the latest quarter. That was driven by its CCG segment, the consumer segment, which saw revenue of 8.8 billion, and that was up 33% year over year as customer inventory levels have normalized and 2023 PC consumption was in line with the 270 million unit forecast. The 2023 PC market was troubled. Now, the factors that led to that was a shortage in 2021 that led to an increase in supply. And then as economies reopened and that economic reopening gained momentum, consumers bought less personal computers, and that led to an inventory glut. And then on top of that, in 2023, personal computer sales, the industry-wide, decreased year over year. So you had increasing supply and decreasing demand, which was a bad combination, and that led to an increase in inventories across the board, across the channel. So that worked itself through. It normalized as companies like Intel and others decreased supply, and 2023 ended the year on a normalized basis. Going into 2024, it's shaping to be a better year for the PC market. Now, 270 million units were sold in 2023. That's expected to increase by low single digits in 2024. So it'll be higher than 270 million units for 2024. And given that inventory supply has normalized, that means a better balance between supply and demand in the PC industry going forward. Management saying they expect first quarter revenue of 12.2 billion to 13.2 billion, so a midpoint of about 12.7 billion in revenue, with gross profit margin of approximately 44.5 cents and earnings per share of 13 cents. Let's compare that with their previous quarter's results. So in the previous quarter, they delivered 15.4 billion in revenue with gross profit margin of 48.8 cents and earnings per share of 54 cents. So it will be a sequential decline for Intel, but that's normal. Between its fourth and first quarter, a sequential decline is normal. It's a cyclical, seasonal business, and there's a decline in the first quarter from the fourth quarter. The good news is that the gross profit margin is not declining all that much, 400 basis points quarter over quarter. 44.5% is still an excellent gross profit margin. And they see material corrections in its Mobileye and PSG segment. And their recent results showed that the personal computer remains essential, and they remain confident in their longer-term total addressable market forecast as the age of AI PC further enhances the value of device refresh. Let me break this down. So, AI PC, what does that mean? Well, these newer generation computers that are coming out are infused with additional artificial intelligence capabilities that's going to make them more desirable for folks to upgrade their computers. Typically, Intel has said the refresh cycle is between 4 to 6 years. When people buy a computer, that's how long they use them for on average. Given that this next generation is going to include benefits from AI enhancements, that refresh cycle may be shortened for this specific cycle. So those computers that were purchased in 2019, 2020, and 2021, especially 2020 and 2021, being increasing years of personal computer purchases as people were working and learning from home, those computers are going to be refreshed at a shorter cycle time. Now, Intel has given a modest increase in PC increase for 2024. They're suggesting an increase of low single digits. But if consumer demand is better than expected, given these AI enhancements, the PC industry could do much better in the back half of 2024 as these newer models start hitting the market. Now, I think with the forecast and this AI enhancement, I think the PC market overall is poised to outperform the low single digit increase forecast for the year. The CFO says we're confident we can grow earnings faster than revenue this year and maintain roughly break-even adjusted free cash flow. Though I'll remind you that the rapid pace of delivering 5 nodes in 4 years and capacity expansion in support of external foundry commitments remain headwinds on the pace of our margin expansion. Remember, Intel has given a long-term forecast where they believe they can get gross profit margin all the way up to 60% and operating profit margin all the way up to 40%. But in the near term, the CFO is saying we're not going to hit those targets in the next 1 or 2 years because of these massive investments we've made to increase capacity. Furthermore, they're benefiting from those government incentives that are giving companies, semiconductor companies, billions of dollars to increase manufacturing capacity, to onshore manufacturing capacity. And so Intel wants to capitalize on those benefits, wants to capitalize on those incentives, and they are investing to capitalize on that. So really good news here from Intel and what management is expecting. The next year or two, they're investing in this growth opportunity. I wouldn't be surprised if they hit that 60% gross profit margin. Not in the next 2 years. I would not expect this to happen in the next 2 years, but I wouldn't be surprised if 3 years from now they start talking more meaningfully about that 60% gross profit margin and 40% operating profit margin outlook as a reality in the next short-term target. So right now, Intel is investing, laying the foundation for the growth over the next few years. And still, the company has excellent profitability and revenue forecasts for the current next few years. So this industry refresh for the personal computer market is a big deal for Intel, and it's going to provide huge benefits as management is noting. So Intel stock investors have a lot to be hopeful for in the near term. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.